All right. Next market, we have NZDJPY. NZDJPY, we are currently bearish. So right now, this market is very clear, creating lower highs and lower lows. We're very clear going to the downside. Lower high, lower low, lower high, lower low, lower high, lower low. It's very, very easy, right? Now that we have approached this area of interest, the daily time frame, for whatever reason, it decided not to respect it as much as it should. Now, this is a little bit of a red flag to me because I don't like it when shit does not respect the areas of interest. I'm not a fan of it. I want for it to get to an area, reject it, and bounce. I don't want for it to get there and start creating all these liquidity grabs and wick outs. That's where you lose trades unnecessarily. I like entering trades once they have the clean move to the area. So right now we have broken above it, but the weekly is still bearish. The daily is still bearish. This is still the lower high, and this is still the lower low. Right now, we're just having a lower high retracement higher than I anticipated. I would have not wanted for it to make it this high. I would have wanted for it to make it to this area and reject. But it's fine because I believe this is actually creating an even stronger position because right now it seems that it is creating a 4 hour area of interest above the area of interest, which this is really not typical. Usually what you would get is you would get a 4 hour or whatever time frame head and shoulders. You would get it at an area of interest or a little bit away from the area of interest or in the middle of the area of interest, but you would never really ever get it above the area of interest. And in this specific case, I actually like it a lot better because when this does indeed have, if it were to have, right? If it were to indeed have this break of this neckline of head and shoulders, not only one, do we have a confirmed head and shoulders, two, we're going to have a break of the area of interest. Three, we're going to have the retest of the area of interest. Four, retest of the neckline of the head and shoulders. Five, retest of the EMA that will then be used resistance. And six, retest around psychological level 84,000. Look how many confluences I just mentioned to you guys on one time frame. That is six logical reasons on why you should be entering this trade rather than not. This is a very high probability trade setup. Now, this can just take a lot more time because it could probably take 2 days for the break, 2 days for the retest. But everything that I just explained logically makes sense. You don't see this break, this neckline, retest everything I just said, and you say, you know what? We're going to buy this shit. No, you're not retarded. You're not a lunatic. You don't want to lose money. You're here to make money. And that is a position where if you explain to somebody that knows absolutely nothing about trading, they're gonna be like, you know what? This dude knows what he's talking about. This makes sense. Makes more sense for me to sell than buy. And that's all we're trying to do 24/7 when we're trading the market. Oh, and not to mention, when we do have this break of the neckline, the 4 hour will also go bearish because right now we have the weekly bullish, daily bullish, and I mean, the weekly bearish, daily bearish, and the 4 hour is currently bullish. It was bearish here, but now it's shifted to bullish. This is the higher low. This is the higher high. And this shift would then make the 4 hour bearish. So we're going to have three time frames in sync, daily price action, 4 hour shift of structure, retest of everything in the mother, everything in the book that you can read. Like this just makes sense. Now, all this can happen, right? And I want to be very clear here. You can wait for all that shit, right? You can wait for everything I just said. Everything can look absolutely perfecto, fenomenal. It can look a 10 out of 10. And then you go enter this shit. And as soon as you go enter this shit, right? You have your beautiful bearish engulfing, you can enter it. And it could do this. It could just wick you out, completely violate you, diddy you straight up and then go straight to your take profit. Can that happen? Oh yeah. Yeah. All day, brother. Now, is there something that I can tell you to avoid that? Habibi, there's not. There's nothing that can avoid that. That is the most unpredictable part of the market. That is the negative side of it, right? If you want to have the rewards of it, cool. That's what everybody's here for, but you have to understand that these things are inevitable. And you cannot not enter a trade because of a potential move like that. I don't ever enter a trade anticipating that something like that is going to happen. Sometimes when it happens, I don't re-enter. Sometimes when it does happen, I do re-enter. Just letting you get, I'm not saying that's going to happen in this specific case, right? I'm not saying that. I don't know that's going to happen. I'm just mentally preparing for you in the event if it were to happen. I just want to leave it on the record saying, yo, I told you so, right? Like everything could be perfect and you could get diddied. It's part of the game, right? Just want to like make that very clear. So yeah, this trade I love the most. I just believe that it's not going to have the full move this week. Once again, you have to ask yourself, be a little bit realistic. On this retest, do you think it's going to have a full massive move this whole entire week? Maybe, maybe not. This is due to fundamentals. I think it can have half of that candlestick move. And then next week, it has the whole entire move to the downside. So this one is just one that we're very much on the lookout. Have my alarm for the break of it, have my alarm here for the break of this, and I have my alarm here for the break of this. So I'm active, right? I'm